Hi everybody, so it's September 11th. Let's look at the market now. And I've been showing this chart here for several weeks. It's just showing the red line is the active listing counts. That's the number of homes that are listed for sale. In this case, it's a single family detached homes for sale. You can see how fast it goes up. And then I was playing around with it and looked at just doing it by the size. So I'm just looking at homes that are 1,000, 2,000 square feet here, and holy mackerel, it goes up so much more. That is a huge amount. So this is like the orange line is 2018, so it's phenomenally more than in 2018. Yikes. For these smaller homes. Now, the question is, why aren't the larger homes, this happening to larger homes? It could be the interest rate. Interest rates have just hurt the sales of the smaller homes more than the luxury homes. But holy mackerel, how do you maintain prices when you have this much inventory? I mean, you can see prices going up when you're really low here, down here in the number of homes for sale. But here, how do you maintain that? Last week, the issue was about the prices falling $10,000 a month for 3 months. Gosh, I think that's going to continue because I'm sorry to say, when you have this much inventory for the smaller homes, or even not, 2,000 foot home isn't that small. But nevertheless, there's so many homes for sale. That's not good. Okay, and if you want to click on over to it, if you click on this, it'll take you over to the website, which has the interactive version of the maps. You just click weekly, and also there's monthly information there. You can go down, and this is the real estate, and you can see that this is now it's almost as high as the max it was. This is the number of homes for sale, a single family. That is almost the max, pretty strong. No, 2019 was strong. 18 was weak. And then 2019, they were lowering interest rates the entire year. And so that's what you're seeing here is lower interest rates is bringing down the number for sale, and sales are going up. And I love this map too to see what we saw this year is that there was a little bit of a bump. You can just barely see it here, but there's a little bit of a bump in the number of homes hitting the market. And you can see there was the number of sold was falling a little bit, and you get this huge bump in the blue, the number for sale. Now what's happening is now we're getting to the number of newly listed for it's kind of lowish. It used to be kind of above the year before. Now it's below the year before, and but this is still low. So what we're seeing is this is leveling off because the number of homes hitting the market is leveling off. You can see more information on that here. I usually disregard the latest week because it get revised up, but nevertheless, the number of homes hitting the market was higher than the year before. Now it's running lower than the year before, but nevertheless, the sales is still running lower, a lot lower than the year before. The number for sales is leveling off. And here's what I mentioned last week is that this price trend, just what I just showed you with the high levels of inventory and the 1,000, 2,000 square foot range. This is likely to continue, very likely to continue, because that number is so high. Okay, let's end with some of these tweets real quickly. Um, that there's also that I'm trying to figure out why there's so few luxury homes for sale. They're really low. Maybe they're waiting until next spring to bring them on the market, or the next winter when the high season hits. Here's another interesting one. There's a graph here. You should check this out. This graph. Maybe we could do it from here. Let's see. Yeah, you can see this graph of this is the mortgage payment. You know how when the mortgage payment is that high, it's because of the interest rates and house prices being so high. I can't continue. Okay, let's go back to. Oh yeah, this was interesting. I was at a realtor meeting, and one of the inspirational speakers said, "You're a hope dealer. Ah, you're selling hope. You're not selling houses." Was the way I interpreted that. And this is interesting. Over the last 5 years, Phoenix had the highest total returns in the country, and New York had the lowest. How often does that happen? But it gives you an idea on how the total returns. I'm sure that's including rent as well as appreciation. It's a great, great, great time. Once in a lifetime time, probably to be a real estate investor in Phoenix. Now, a question I have on the rents. The rents is a big issue. The eviction moratoriums, was that a factor behind the skyrocketing rents? Probably, but was it a big or a small factor? And are skyrocketing rents a big factor behind the skyrocketing evictions? So now we have skyrocketing rents. It's got to be a factor behind, one factor anyway, behind the skyrocketing evictions. And here's another story on the evictions from AZ Central. And this guy did an interview, and he made a good point, and I agree with it. It says, if you're in a market like Phoenix where you have a lot of investors, you might want to, and you were thinking of selling in the next couple of years, you might want to sell now. I agree with that because the investor market is going to, with rents softening, prices not increasing, they're just going to be fewer and fewer investor sales. Anyway, that's what I'm thinking this afternoon. So if you have any, so if you have any questions, just leave a comment. I'd love to hear them. Take care.